Everything.
What?
Fixed income,
Uh-huh.
forex.
Yeah. I didn't know there was that much trading took place here. Is that quite new?
No, it's not. Our company outsources for Anspach Bahamas.
Ah,
So we do their international trading and also their local trading. Sorry, we do local trading for CFP, but international trading for Anspach.
okay, thank you. Lady at the back.
Hi, my name is Alma McIntosh, 13 years in offshore banking and presently with an external asset management company called Excel Partners, where I am an external asset manager.
Okay, thank you.
Hello, my name is Zenobia Sabal. I work at Delta Bank and Trust and corporate accounting. Financial account.
You're an accountant? Okay, well, we'll be leaning heavily on you as we do not so much this evening, but tomorrow evening. Everybody will be wanting to sit next to you, actually. And the lady in the back.
Hello, my name is Therese Mizik. I'm a CPA. I work at Deloitte & Touche, and I took this class because I just wanted another certification.
So you're an accountant as well? Oh, that's two, gosh. Lady here.
Hi, my name is Beverly Williams. I'm unique.
No?
I'm not working right now.
Okay.
I was a stay-at-home mom for 13 years,
Uh-huh.
and I'm using this course to get my brains jogging again, I guess.
To get back into
I
it.
have an accounting degree. I've worked at Coopers & Lybrand and
Right.
American International,
Gosh.
but I'm just interested in this.
Okay, very good. So it's 3 accountants so far.
Hi, my name is Quentin Lightborn. I work at Credit Suisse, Wealth Management, operations and trade analyst. I wanted to do the CFP course. I felt as if it was something that I ideally think is something that needed in our Bahamian economy
Yeah.
in terms of business-wise, financial planning and stuff on a grand scale. So one of the reasons I decided to take the course.
Yeah, it's been very popular over the 7 years we've been doing it now. Yeah. Welcome. Lady at the back.
Hi, my name is Hollis Lightborn. I used to be the senior account manager at RBC. I'm transitioning into Bank of Bahamas. My position, I can't speak of right now because they're restructuring, but it's along those lines. I just took the course to get an answer.
Okay, so you're from RBC?
Yes, I used to be.
Used to be.
Yes, I'm transitioning into Bank of Bahamas.
Okay. Lady in black and white.
Hi, my name is Bria Brennan. I'm with Scotiabank. I am presently assistant manager of administration, dealing with nothing to do with accounting, our sale, possession, and sort of stuff. Assigned to another post right now. I took the CFP course because I'm interested in moving over into the private banking area.
That's a private banking. Yeah.
Hi, my name is Anel Gillette. I'm also with Scotiabank.
Yeah.
I'm a foreclosure power sale officer, and I took the course to become certified because I feel as if this would further advance me in my banking career.
Tell me again what you said you did?
Foreclosures.
Oh dear, that's bad news, isn't it? Yeah. So what you learn on this program, we hope, will stop people being foreclosed. So we're trying to take a conservative approach. Yeah.
Hi, good afternoon. My name is Tanya Malapaka. We're currently employed at CIBC, First Caribbean International Bank.
Yeah.
Work in the corporate banking unit as a business analyst.
Right.
I decided to take this course for several reasons. Having had offshore experience now in commercial banking, I thought that this would be the ideal course for me to further my development in my career path.
Okay. Welcome to the program. Okay, so everybody's got copies of the notes, except you? You don't? You don't. Okay, well, you can borrow mine in a moment. Okay, so the first thing we'll be doing this evening is more on the personal side. So you'll see the first section is called financial situation analysis, and those words are quite important. So for you to work as financial planners, you really need to understand the person that you're dealing with. Now we have all these expressions, don't we, for years and years, KYC and all that sort of stuff. And people are so used to saying, well, know your customer, which is probably around before you went to stay at home, that it's a concept that's kind of lost its way a bit. But what we're trying to do is really understand the financial position of the customer, yes? And then when we move on to the corporate side, the business side, it's the same idea. What we're trying to do is understand, you know, the business side, whether it's a small business, a medium-sized one, or a large one. The things that we don't cover are the trading aspects, because that's more on the market risk side. So what we'll be concentrating on is the financial planning side. So if we're looking to try and understand a person, you know, he comes in to see us. There's only one man in the room, so I'll be picking on you apart from me. So he comes in to see us as a person. I mean, what do we want to know? What sort of things are we interested in about him as a person? What we're trying to find out? Ladies, what would you like to find out? Come on, you've not done this a long time, so we'll start with you.
Because I haven't done it a while.
Because you haven't, yes. So, again, you said you wanted to get your mind going, so there we go. Jump start.
What would I want to find out
Yeah,
about
about him, yeah.
How much is it made?
Yeah, that's a good start, yeah. So what we're interested in is income, yeah? And what else are we interested in? Yeah, the expenses. So what expenses has he got? And why are we trying to find that out? We want his income, his expenses. Why do we want to see that? Yeah, so we can see what he's got left over. Yeah. No, it's the same when we look at a business, yeah? Whether it's a small, you know, corner shop, whether it's John Bull down Bay Street there, or whether it's Atlantis Hotels, yeah, it's the same thing. We're looking, you know, for the income, and then we're looking for the expenses or the costs. Expenses, and then we're looking for what the surplus is, yeah? If there is one, yeah? So some of the people you'll deal with as a financial planner, you'll do this and then you come to here and it's a negative position, which makes it much more difficult. So is there any scope for the person improving this? Possibly not, so you need to look, you know, at the costs and expenses and see if we can help them in some way to try and reduce. Now, women are much better at this than men. That's a statistically proven fact, particularly in the UK, and it's my experience in the Caribbean as well. Having been come to Caribbean for 25 years, women are much better at this part than men. The only exception to that was Mrs. Thatcher, we all heard of, the Iron Lady, when she was Prime Minister in the UK. She was a master at this. But when she addressed the Houses of Parliament, she put UK at the top of here. So it wasn't him, it was UK. So she treated UK as a business. And then she said, that's a problem with all you men in this room. All you're doing is spend, spend, spend. And then we look at seeing what we got come in. And if we can balance it, she said, we're going to do it the other way around. Yeah? So what we're going to do is a budget. So this is one of the things we're interested in. Now the thing you have to get used to is terminology, okay? One of your most difficult things in your job now is terminology, and it'll be the same during this program. You ladies who have done accounting, you'll know exactly what I mean, particularly with the textbooks you study. Yeah? If you're studying an American textbook, terminology tends to be different to a European one. So question straight away is, why do Americans not use international accounting? Anybody know the answer? Well, the answer is because they use their own accounting, don't they? So it's a divided world. Good news for you is all of the world except the USA, well, have to be careful here.
Ready to go on YouTube?
Yeah, exactly. Are you recording it already?
Mm-hmm.
I was making jokes about you when you went out of the room.
That's okay.
Sorry about
As
that.
long as it ain't put Ingram.
And President Obama's dog.
Oh, yeah.
Trouble again, yeah. Yeah, so most of the world uses international accounting standard except the US. So when I worked in New York twice recently, I asked American bankers, you know, why don't you use international accounting standards? Because Americans are so international, aren't they? I would say they are. Anyway, and the answer was, they told me their accounts are better than international accounts. Would you agree? As an accountant, you don't want to comment?
No.
Yeah. So I said, oh, excuse me, wasn't Enron an American corporation? WorldCom, Tyco, excuse me, wasn't Madoff using American accountant? Yeah, Madoff with his Ponzi scheme in New York? Anyway, it was only a teasing question. But it's true, and it affects your work here, doesn't it? You know, because you're just hanging off the side of the USA. So you're going to get business people coming in who might have American-style accounts. So it's important. And when we come to the cash flow side, then you'll see this is where it does become difficult. And the experience on the financial planner program and on the certified credit professional program is the cash flow is the most difficult part. So if you get a chance, I'd encourage you to try and look at some different styles of cash flows. We will look at both. We will look at the international one and we'll look at the American one, yeah, and try and get you straight on both. So, this is a budget looking at income and surplus. Over here, we're talking about cash flow, yeah, the cash flow of the person. What's the other document you think would be interested in trying to find out from this young man coming in to see us? What else could we try and construct? Yeah, his assets and his liabilities, yeah. And if we did that, what would that give us, we hope? Yeah, his equity, or I prefer the term, his personal net worth. Okay, so that's very good indeed. So what we've got then is we've got the budget and the income, etc. We've got the cash flow position to look at, and then we've got the balance sheet. Now the balance sheet is simply a list of all the assets in the business, or his assets. And then on the other side we list the liabilities. The accountants all know this. We take the liabilities away from the assets and we hope to get a personal net worth position. So we're looking for the personal net worth. Now when we do the business, the small business, medium or large, it's the same exactly. We'll be looking for the same three things. We'll be looking at the business, looking for the income statement. We'll be looking for the business, looking for the cash flow. And we'll be looking at the business for the balance sheet. But this time we'll be looking for the business net worth, yeah? Now we can still use the same term, and it's important to do that because when we look at the larger businesses, it becomes much more complicated, as this lady would tell you. If it's a large company, the net worth could be made up of share capital, revaluation reserves, retained earnings, some share premiums, all sorts of things. But at the end of the day, if you're not sure what the net worth is, well, add all the assets together, add all the liabilities, take the liabilities away, and you'll get the business net worth. Now why I'm starting with this is to try and ease the way for you. There's so much mystique in accounting, isn't it? Accounting's difficult, but we have to cope with it all the time, and you're definitely going to have to cope with it during the financial planner program. So you're okay with that? So we could switch from him straight to the Atlantis Hotel or Hilton where I'm staying, yeah? And we could do the same exercise. So these are the three key documents that we'll be looking at during the program, okay? So the same when we do this, we're hoping for a surplus. When we do the cash flow, we're hoping for a positive cash flow. Personal cash flow is quite straightforward. You've either got the money or you haven't. Yeah? And generally you start with some money and then you spend some and then you're short. Yeah? If you're short, you've got to try and get it from somewhere. And we'll look at the three key sources if you're cash negative. And then when you do this, we hope you've got a positive personal net worth. Now the problem in the UK at the moment is there is about 1/4 of the entire population in the UK, if they do this, they've got a negative. Why have they got a negative? Because if we went back to 2007 and 8, when the global crisis started, just before that, most people in the UK had a personal net worth that was positive. So what changed? Because of the crisis, properties collapsed, yeah? Well, you know this in your job. And of course, most people, their main asset is their property, yes? The real estate. What happened to the value? Collapsed, yeah? What happened to the loan? Did the loan go down? Of course it didn't, yeah? So the loan is generally more than the asset value. Now, if a business encounters the same situation, if we're looking at a business with a negative net worth, they should not continue to trade unless the accountants certify the prospects of the business, because they're trading in what we would call an insolvent position under the 1986 Insolvency Act. People do, of course, continue, yeah, but they shouldn't really continue. But we'll look at all that later. So those 3 key documents we'll be looking at. Okay, so let's make a start from this. So these are the sort of things we'll be looking at during the program. And what we're trying to take is a logical approach, right? It's not meant to be a complex approach, so we wrote this, many years ago to try and help people understand what was going on. I have written 16 books in total, so I'll do a commercial right now. That's the good news. The bad news is I haven't written one for 10 years. Why? Because I got fed up of writing. And there's some books on Amazon if anyone wants to take a look. The best-selling book was Cash is King in 1994. That was translated into Spanish and Italian. So cash flow is still, very popular today. So what we're trying to do is to interpret the financial and the non-financial information. I wish I'd had that earlier on because I got really wet. And this, you'll see again, is symptomatic of the business. From a business person, we will get certain financial factors, and we'll get certain things that we call the non-financials, yeah? From a person, there will be certain financial characteristics that we can extract, and there'll be certain non-financials, and the Americans now call this behavioral finance, right? I can't even spell that. Behavior finance, how people behave, yeah? This is a new wave coming out of the USA. I don't like to tell them, but we've been doing it 30 or 40 years, but never mind, that's how America is, isn't it? And then the capacity to draw conclusions from this will be our next step. And then what we have to do is to apply, good judgment through this common sense approach. So what we're going to give you is a number of frameworks and ways of trying to remember things. So here's a starting point first, some essential requirement questions. A lot of these questions are very straightforward. The problem is getting the information. Some people are very secretive. You have to develop, we have a whole module on relationship skills, trying to help you with that. Miguel will do some filming of you. I should warn you about that now. But it's not a big thing, it's just like a 5-minute presentation on anything you like. It can be a personal hobby, or it can be business, it can be a product, whatever you want to do. And then trying to get this information, how much is the total income, what's the source, what are they doing with the money, this is expenses, etc. Do they have plans for making investments, that's why they're coming to see us, or are they coming to see us as financial planners because they've got debts, and they're trying to figure out how to manage the debt position. And then if these plans go wrong, we hope they're not going to head towards this lady here in her current job. What will be the position if the plans go wrong? Is there any fallback position. Nobody wants to have their home foreclosed on, do they? And the bank doesn't want to. What happens when you foreclose? Do you get the full value? Of course you don't. Very rarely. Why? Why is that?
Everybody else is like a market.
Yeah, there's a lot of properties and bad news travels fast, doesn't it? Yeah, you know, the world out there. And then going back to him, what's his work experience? And this track record, I'd like you to underline track record, because when we look at all of this, what we're looking for is the track record, yeah? So we'll be looking for the track record of the person, and then when we look at the small business, the same. Or the medium business, the same. Or the large company, the same. And when you're trading all of these products, you look at market movements and stuff. Yeah,
Sometimes.
sometimes. What do you do then? Just press.
Well, it depends on if we are, it's discretionary account or not, then we look to see whether we're gonna buy any security or not. But if it's a client, do a directed order, which is executed.
You just execute, yeah. So you're doing a transaction. Yeah. So what we're looking for is the track record of the person. Yeah. So he comes in to see us. We're finding out about his income, his costs, etc. We try and find out about his cash flow. How's he doing managing his cash? We draw up a personal balance sheet to see if he's got a net worth. All of this is to help us establish a track record. Then we can ask other things. Has he had a loan before? Yeah, from the bank. Has he repaid the loan? Has he been making investments? Yeah. What sort of insurance does he have? Stuff like that to try and paint a financial picture. So these things are easy to say, but it can be difficult to find out. Some people are very secretive, aren't they? You know, they say, why do you want to know my business? Yeah? I mean, what? I mean, if they take that attitude, what's the point in them coming to see you as a financial planner? Yeah? You can't drop a financial plan if you can't get the information. Well, you can, but the financial plan can be flawed because you don't have the facts, do you? Same as when your ladies are making a cake. And if you don't have the right ingredients, it's not going to work out, is it? And no matter how clever you are as a cook, if you don't have the right ingredients, it's not going to work out. So there's certain things we can use to aid our memory. Here's a good starting point. This one's really old, over 50 years old. The 3 C's was the first approach. So you can underline that. You're almost certain to get a question on that. Character, capital, and capability. So that's a well-known one. And then later someone developed it to 5 C's, and then recently some Americans expanded it to 7 C's. But we don't need all that. All we stick to is the original 3 C's. There's another one called PASA that we look at in a later unit. And then this Campari, which we'll look at this evening. Campari, easy to remember. It's either French or Italian drink, I'm not sure which. Somebody needs to make one here in Nassau, call it Bahama Mama, yeah? And try and figure out a way of using that for financial planning. The other one that we can look at is SAS, which stands for the stability of the person. What attributes have they got? Goodness me, it's only 20 to 4. 6:45 I make it. In the UK right now it's 1:45 to midnight. Yeah, I mustn't think about that. Let's try and keep going. We're 5 hours difference. And the serviceability and security, the collateral positioning that they've got when we look at the balance sheet. Yeah? So the key to the planning side would be trying to identify these things, and in particular the serviceability aspect, which keeps coming back to this. Yeah, keep coming back to this. So the balance sheet will help us, look at their assets and their liabilities. But the main drivers for us as financial planners will be this income position, and linked to the cash flow. Same as when we're looking at businesses. Yes, we'll look at the business balance sheet, but then our main work would be on the income statement and on the cash flow position. Any questions so far? Okay, so here we go, finding out the facts. This is the tricky bit. So what you can use is various bits of checklists and information, and we've given you some ideas here. So you've got a copy of this now?
Yeah, thank you.
What background, do they have an account with your bank if you're working in a bank or whatever, or if not, where is their bank account? Do you have any investment plans, any credit cards, stuff like this? What can we find out about their track record? Present banking facilities, what debts have they got? And then towards the bottom of page 5, there's an information checklist. Now, what we encourage people to do is add things to it, you know, that's more applicable to you here in the Bahamian context, you know, cross things out that you don't think are appropriate. So that's all trying to find out the information. Then the next page, page 6, is an example of a personal balance sheet. So we have all the assets there, the liabilities, and the personal net worth. Now when we look at the business balance sheet, it'll be the same idea. So on the personal balance sheet, we're going to have the assets, you know, less the liabilities, giving us the net worth position. And it's the same when we do the business, whether it's small, medium or large, except that we split the assets in terms of accounting. So we'll ask our accountants, how would you split the assets in the balance sheet? What type of assets would you start with? Yeah, current assets. So we'd have current assets. So these generally are shorter term assets. And then we'd have fixed assets. Yeah, fixed assets. And if we add those together, we'll get the total assets. And then on the other side would be the liabilities. So we'd have, what type of liabilities first? Current liabilities. And they're generally liabilities that are due within 12 months, yeah? So less than 12 months. And then we have longer term liabilities. And then we add those together to give us the total liabilities. And if we take that away from the total assets, we should get the business net worth. We should. Yeah. We hope anyway. So small business, generally it would be the capital of the business. Larger business, it can be capital and reserves. And very large corporates, sometimes it's referred to as shareholders' funds. There's all these different names which are meant to confuse you. And the same when we go to the cash flow section in the business, you'll see there's some confusions in there. Okay, now the next page is a very, very important page for us. When I say us, I mean us working in terms of the financial planning. Okay. Has anyone filled one of these in before? Budget planning? Yes? On a personal basis? Yeah, very good. Okay, when you meet the customer, you know, this will be a key document. You know, we really need to find out what's happening in terms of our expenditure. You know, it can be quite difficult sometimes to extract this information. It can be quite difficult to get the balance sheet information as well, but we need to persevere because we're interested in what is the surplus position at the bottom there. Okay, I'll mention Campari. This is like an aide-memoir approach for you. So you can see that coming on the screen now, and you've got it in your notes. You see, I've started with those lovely words, integrity and honesty. Goodness me. And that's very difficult to find out, isn't it? You know, that's a question of judgment. And people change sometimes as well, don't they?
Sorry.
He's back. Oh, sorry. Hello.
Oh,
Do you want to join this lady over here?
sure.
You're welcome. So you said when you came back you were going to...
Well, what I'll do is I'll do it at the end of class.
At the end of the class?
Yeah. Give you a rundown on the exam and so forth. Okay? Alright.
Okay. What time's the refreshments?
They should be here by 8 o'clock in here.
Yeah, there's a clock.
It doesn't work. Refreshments should be here by 7, no later than 7:30, I told them. What to do now?
Okay, thank you. Okay, so looking at the character aspect there. And they have a track record of investments that we're looking at. Do you have any notes? Did he give you?
Yes, he did.
Okay. The ability of the person, you know, their earnings, what's their present job, etc., etc. The margin, purpose. The amount. Now this is quite difficult because it, you know, relative to the meeting that they're having with you, you know, what percentage are they contributing towards the debts or towards the savings plan? And repayment, if, you know, do they have financial flexibility? And insurances, are there any insurances held? And then there's a chart on page 10 that we're going to use on case study. Okay, so to bring this a bit to life, because I've been talking for quite a while now, if you find the case study John Edwards, and we'll treat John Edwards as our first financial planning client, so welcome to the program. But you've got a lady next to you there who I'm sure will help you. So if you've got somebody next to you, work with that person. If you're on your own, you're on your own. And what we want to do is take a look at the case study John Edwards. Okay, so if you look at John Edwards and then use the Campari framework as a template, what I'd like you to do is obviously read this through and then talking with the person next to you, see if you can complete some of this Campari framework. Now, like any situation, you'll find some facts, and then you'll also come up with a list of things that you don't know. Yeah? So be prepared for things that you will know, and for some things that you don't know. And as you read this through, you'll see there are two options. So if you look at the fourth paragraph, sorry, third and fourth paragraphs. So you'll see the first option is he's asking his bank for a loan of $2,500 and he wants your opinion on that. And you can see that's one option. And then the second option is he's going to ask his bank to take over more of his debts, look at his credit cards, giving a total loan requirement of $7,000. So read it through and then consider those options and discuss it with the person next to you, and then we'll debate it, okay? So I'll give you like 10 or 15 minutes to have a look at this case. So try and imagine this is a real case. John Edwards is coming to see you and see what we can do. So you make a list of things that you know and things that you don't. get through, start talking to the person next to you. See what ideas you've got. So he's coming to see you for some advice because there's two options. You need to have a look at both options.
Ready to talk? Okay. You look at the book.
Yeah, try and use the Campari to help you with the discussion.
Yeah. But what I mean, with the 15 minutes, because I knew that every month is a bit too easy. Also, he was taking within the mortgage, he's like, that had increased by the same amount, right? So, to me, I'm using, you know, with an answer, so, to me, the man for $2,500 wasn't even going to, take care of it. Well, that's true. I mean, and then I think it's like much more than you so I agree. I to leave, none of these. I mean, to figure out the better way. I was saying, but I would think either. No, I would think so. Because, I mean, loans period, and you have to repay that. Right. What did you
It is.
So, yeah. So I feel that even after, yeah, and then after, he's not down relation, he's a mortgage, unless he has that. Right, right. And even though this is second one, he still wants 150. Yes. It's reasonable. Yeah, the whole drive is the presence, yeah. The meeting was the 9, and he was the 900 and the 390. I rounded it up to be on the They say after 90 and that's I don't know where it goes in that. Because he can say 300, but I mean $500 because it's package. This loan is $200 a month. So the difference is I don't know, but the trading that's in the States, they want to run out.
Okay, we take a look at Mr. Edwards. Yeah, so there's quite a few things that we can figure out from the information we've got, but as you'll be discovering, there's lots of things that we don't know as well, yeah. I mean, what's the starting point with this case? Would we want to try and help if we can?
Yes.
Yeah, why? Why would we? Yeah, he's been a customer of the bank for 5 years. And his character, when we look at the C and the Campari, I can't put it on the same time. Yeah, he seems to be reasonably stable from what we can see there. But recently he started to have problems, yeah? Yeah, and the reason could be his move of property, yeah? I think anyone who's moved property, you know, it always costs you more than you expect, doesn't it? So it could be like a genuine reason. So there's two options that we're looking at. So what about option one? Let's take a look at option one of the mathematics. So what I got was option one, in the first paragraph, his overdraft stands at 950, so I wrote that down, 950. Then in the next paragraph, I got his Building Society standing orders for 3 months, $900 in arrears. So I've got 950 and 900. Then he's got other bills totaling 300. So that's another 300. And then car repairs, 150. So option one, I added those together and I got $2,300. And he's asking for 25. So it does fit within, you know, the amount on the Campari framework. Yeah. I know it doesn't match exactly, but it's better that it's slightly less than over the top. Yes, that's the first calculation. So you could consider that as option, yeah? That's option number one. I mean, there is actually another option, number one, which is where you think, well, he's got himself into this mess, he can sort it out. But that's not really the purpose of our program. You know, as financial planners, we're meant to be trying to help people, not just to show them the door. So option one is that $2,500. What's the problem, though, with option one?
It raises his monthly payments instead of loans.
Yeah, it raises his expenses, and what does it do in terms of sorting them out?
It doesn't help as much.
Does it sort them out?
No.
Not really.
Not
Yeah.
much.
So if he wasn't filming this, I would be able to say more, but yeah. Option one is just like a partial bailout, isn't it?
Yeah.
You know, our friend in America, he has the expression, you know, bailout or bust. This is not quite as severe, but it's a type of bailout, but it's not probably going to like your situation. So we can look at option two. So option two consists of the same figures for option one. So I took the $2,300 that I calculated for option one, and then I added on the $3,000 to pay off the finance companies, and then his credit card balance is in the second paragraph. That's $1,500, yeah. So I've now got $2,300 from option one total, plus the $3,000 to pay off the finance companies, which is in the final paragraph there, and then the $1,500 to pay off his credit card. So I make that $6,800. Yeah, so again, it's just within the loan requirement. Now this option, as the lady at the back pointed out, this option has a benefit, because this time, what does it do this time? It reduces his monthly commitments by $300, but of course he's got to pay it back, hasn't he?
Yeah.
Did anyone have a chance to try and work it out? So it's 5 years, that's 60 monthly repayments of $7,000. Yeah, I don't know what the interest rate would be.
13%.
13. So what did you get per month? I don't know if you have any. 233. That sounds a bit high, I think. Anyone have a calculator with them for that? I forgot to bring mine, sorry.
Should be one something.
I made it, yeah, I think it's 100 and something. It's probably 160 or 160, 180. Yeah, that sort of order. Yeah, I forgot to bring two things, my umbrella and my financial calculator. I'm sorry about that. 131, 132 we're offered, yeah? Yes, so let's say about $140, yeah? But he's saving the 300. So option 2 looks quite good. Now, what would we do next though? So if we think, well, we might help him with option 2, what should we do next?
Cancel this credit card.
Well, yeah. Yeah, that's a bit further down the list. No, we have to do something more constructive first. What are we missing? We're missing lots of facts.
Yeah, we're saying
Yeah.
increase the
Yeah. So what we need to do is we need to meet with them, and which of the documents that we skimmed through quite quickly.
Budget.
Yeah, the budget, yes. So what we really need.
$800 standing order.
Yeah. Yeah, well, yeah, but if we head for page, is that page 8?
Yeah.
Page 8, look. So page 8 will be key because we're playing around with this, aren't we? We're trying to reduce these commitments, but we don't really know all the information. Okay, so we're meeting with them and we're telling them, you know, we've been looking at it, option 2, we might be able to assist you or try and recommend that you pursue that option, but we don't have enough information. Now then, if we give them the budget planner, do we give them the form and ask them to come back with it next week or send it in the post? No, what do we do? Yeah, we do it right now, don't we? Because you know what will happen? You know, you say, oh, I lost the form, or I've been too busy to fill it in, or I sent it to you in the post, didn't you receive it? You know, stuff like that. So the thing to do is, if you have got time, to try and do it straight away, if possible. So we can sit with them and go through this properly with them, and then we'll be able to see at the bottom of the form, you know, what surplus has he actually got. So we put all the figures in there and see what surplus he's actually got. So when we've done that, then we can factor in the loan repayment and see what the position is. Now when you've done that, if you're quite comfortable with that, there is actually another possibility. Did anybody think of another possibility while we're looking at this? Yeah, there's another possible solution, but it's a bit more. Yeah, you know, it's not another solution you would look to unless you felt, having met him and having done his budget and having seen what has happened, whether if you felt really comfortable with them. What is another possible solution? Looking at this, look at it again. Look towards the end. There's a clue towards the end. What's he offering you? Second mortgage over the property. Do you take second mortgages?
That's all it is there.
And do what?
The mortgage, we go for the mortgage.
Yeah, that's it. So there's another one, isn't there? Option 3 is to take over the mortgage. We don't know what the outstanding mortgage is, and we don't know the value of the property, do we? I mean, we're told there's an equity of 30,000, but we don't know if that's right or wrong. So the next thing to do would be, we've been doing the budget planner. Yeah, we've been doing the budget planner. We could then go to here, couldn't we, to get these personal balance sheets, yeah? So then so we've got the budget planner completed, which will help us with these income and these expenses. So that's been the thrust of our work so far. And then we could head for the balance sheet. Let's see, you know, what all these assets are. Let's see what all these liabilities are. Then if we were feeling really comfortable with them as a person, we might, okay, so it's just a might, we might consider or might recommend taking over the mortgage position, yeah? Which would strengthen the position of the bank in terms of the assets, because we're told there's an equity of 30,000. I'm not saying we would do that or not, yeah? What I'm saying is it's a possibility, you know, that you might look at during the interview with Mr. Edwards. Everybody okay with that so far? So we're hoping, based on the facts that we've got, and we're hoping based on the interview and completing the budget planner, yeah, that there's a sort of surplus that would be able to cover the $140 per month, so we could tidy up his income and expenses side, and then we could head to the balance sheet position to consider taking over the mortgage as well. But you might not want to do that, yeah? Some people wouldn't go for option 2, some people in the past when we've done this case would only go for option 1. So it's a commercial decision, yeah? What we can help you with is the route, you know, the route to figuring these out. And then the commercial decision will depend a lot on who you're working for, you know, what their risk appetite is, yeah? And what it is at the moment, yeah? At the moment, and that's why most people are pretty cautious, aren't they? You know, a few years ago it wasn't like that at all. Everybody was go, driven by targets, weren't they? Yeah? Get new business, etc., etc. But we're more cautious at the moment. Okay, so that's Edwards so far. That's Edwards so far. Well, let's take a look at something totally different, which is ladies. So you and I, we're going to have a good time this time. But it's a lady case called Jane Brown. So let's take a look at Jane Brown. What sort of idea? Think about income and expenses, and then think about what we're going to be trying to advise Jane. So let's take a look at Jane Brown. Everybody found Jane Brown? Which usually makes a lady smile, that's good. Okay, everybody read it? Yeah, okay. So, You were very helpful to Mr. Edwards. What are you going to say to Jane?
No.
No.
She didn't say that. Yeah, serious.
Yeah, so what's her character like? See you in Campari.
She doesn't have bad character.
Well, we're not sure she's got a bad character, no, but what's happened to her character? Has her character been influenced?
Yes.
That's what we suspect. By whom?
By Mark.
Mr.
Martin.
Martin.
Yeah.
What do we know about Mr. Martin? Yeah, well, he owns his flat, we're told, but we don't know how much it's worth or what liabilities he's got. Exactly, yeah. So what's happened to Jane then? So Jane's going to be dashing in to see you, and she's not like Mr. Edwards, he's coming in, you know, looking for help to try and sort himself out. Jane's coming in full of expectation. Why? Because she's going to get this $30,000, and what's she going to do? Straight away, buy a timeshare.
Something she doesn't even own outright.
Yeah. So she's going to buy a timeshare with $60,000 immediately. And how's she going to repay the bank? From what? So if we look at the R in the repayment on the Campari sheet, she's going to repay it in two ways. Yeah? Partly by what? Yeah, we'll come to that in a second. Partly by what? The $30,000 from where? Yeah, which has been agreed, but when is it payable?
That's right.
We don't know, do we? Yeah, it might be agreed now, might not be paid for 10 years,
Exactly.
or whatever. So that's an unknown. So this time the repayment is unknown there. And where's the other source of repayment?
Anticipated rental income.
Yeah, anticipated rental income from what? From the timeshare. But can you sublet? And how many weeks can you do that for?
2 weeks.
Yeah, my understanding.
Saving good.
Yeah, my understanding of a timeshare is that's exactly what it is, the share of time for usually for quite a short period, isn't it? And then if you only got a short period, how are you going to rent it out sufficiently, if you can sublet it, for how much you're going to sublet it for how long, to repay the balance of this loan? So repayments questionable, isn't it?
So she's supposed to be relying on Jack.
Possibly, yeah.
Jack is relying on her.
Jack's relying on it, yeah. But she's going to come through that door and she's full of expectation, isn't she? She's very happy because she's getting rid of the old one. Good. So how would we handle it, yeah? So you know you have another module on planned relationships, but this is a start. You know, she's going to come in full of expectation. She's getting rid of the old guy, yeah? Getting $30,000. She's met Mr. Martin, who she's living with now. And she's going to marry him straight away, isn't she? And she wants to buy the timeshare and they're going to live happy ever after in the timeshare and in Mr. Martin's flat. So, you know, she's going to be coming through that door to see you feeling very good, right? You're the bad guy from Credit Suisse or wherever, trying to remember where you're from. You're going to have to try and let her down gently, aren't you? So how are you going to manage that? How are you going to approach this interview? It's difficult, isn't it? So how would you start it up?
You have to be calm.
Yeah, you have to be calm, yeah?
You know, settle it down.
Try and settle it down.
Yeah, and then once you just give it a fox.
Yeah, what are we,
Definitely get her alone.
yeah, we're not going to give it a loan, but what are we trying to achieve with her?
You want a future relationship?
How about come to understand?
Thank you. You
Right.
need to make her understand, because you know some people, especially I find in my dealings with some behaviors, they think you're jealous of them. You don't want them to have this place. You know?
Yes, could be.
So you have to say to them, okay, this is your income here. In order for us to lend you, this is what we need. You know,
So
break
let's
it down
start.
to sure. This is the reason why we cannot assist you at this time. We consider it at a later time once you've
Got your money.
you got the money, you
Once
know?
you settlement.
See, that's a good plan, isn't it? So what we could do is to try and divert this slightly by starting with right at the beginning. Let's start right at the beginning. So what's at the beginning? It tells us
Talking about our income.
about our income. She's got so much.
So it clearly shows she doesn't have the ability to repay.
Exactly. So she can't manage at the moment, can she?
No, you're ready.
So to try and manage the interview will be quite difficult. So we need to start by managing on something which is more factual, yeah? So the factual position is, and you did very well on that, is that what's been happening is, you know, her monthly salary credit varies, but she's been taking overdrafts, etc., etc. So the starting point with her would be to talk a little bit about how her account is managing at the moment, and then we could do the budget planner with her if we got a chance. We probably wouldn't, because she'd keep jamming at you, wouldn't she, for the $60,000 that she wants. And then, where would you go next then? So you had a good starting point. What would you say to the next? Yeah, so that's it. So what we're trying to do is to try and cool her off slightly, right? Because she's overheated in the situation. When we know you're going to get 30,000, that's very good news. Do you have any idea when you might receive it? Oh, well, yeah, she might not have even thought of that. Or she might be expecting it next week. You know, it could be next year. So we need to get her to gain a little bit of time. And we're very sorry at the moment. You know, we definitely couldn't advance you $60,000 to buy the timeshare. Why? Because we're not sure when you're going to get the 30,000, and we're not sure how you could repay the balance, because in our understanding you can't, you know, you can't sub-rent. Have you checked the documents? Are you allowed to sub-rent it? How many weeks have you got? Have you worked out what your income's going to be? So we just like slow it all down, and you know, that would be quite nice, wouldn't it? She might be quite grateful actually. Now we can talk about Mr. Martin, who's obviously, you know, the best guy that's ever walked on Bahamian soil, at the moment anyway, for her. So that's how we'd handle it. Is that okay? Yeah. So again, it's not a situation where as financial planners, you know, we're like shutting the door on her, because she could be coming back in a few months with the $30,000, and you know, she might have thought about it. We don't know. You know, she might have thought about it and thought, well, that advice was good, I'm back now, can you help me with some investment advice on the $30,000? We've decided we're definitely not going to go for the timeshare, yeah? And that would be a good thing to do. Everybody all right with that? Yeah? Okay, very good. Right, okay, let's see where we head next. Well, the food should have been here by now, but as you'll discover, things don't always go according to plan. Even as a financial planner. Okay. Okay, right, well, rather than start on another personal case, what we'll do is we'll just recap on where we've got to with this. So I know you missed the beginning coming in. So let's just recap on this bit here. And then we'll make a start on the financial situation analysis, where we start to look at the small business, yeah? And that'll do some prep work for tomorrow evening. So you won't understand all this, because this is the way I kind of scribble things. But if you've been here, you would have done. So why were you late? Yeah.
Why?
Because of the
You want
rain.
to know? You want to know?
Yeah.
Because the flight was late.
Yeah.
You all were supposed to start last week. I made arrangements for this week.
Oh, sorry about that, yeah.
Yeah.
Who told you I was supposed to start last week?
Because of the last. Yeah.
That's another story. Okay. Yeah. Okay. So we're all even now.
Yes.
1 point to you, 1 to me. Okay, so the idea is when we're doing business or personal, the three things we're trying to head for are like the income side, yeah, income and expenses and stuff like that, to try and see what the surplus is. We're trying to look at the cash flow position, which would be critical, because you know, cash is always a fact. You've either got it or you haven't got it, yeah. So that's going to be a critical thing to look at. And then there's the balance sheet, whether it's the person or the small business or a huge business, you know, like the Islanders. we're looking at all the assets, looking at the liabilities, and looking for the net worth position. So it's the same, it'll be the same when we do the business, it's just a bit more complicated in looking at the businesses. Okay. Right, so let's go from here. So this was the person that we're looking at. So let's develop a template which we'll be using tomorrow evening. Now this template I'm going to show you is based on the income statement, yeah? For a small business, medium or large business. All businesses are the same. This ASEC computer or, you know, that Landis Hotel Group, it doesn't really matter. The income statement, if you get the template, it will serve you on any business, with one exception, which is financial institutions. Yeah? Banks, their income statements, their balance sheets, their cash flows are very, very different. So what I'm about to show you will serve you on any business, except the financial institution. So here we go, income statement. So if you just write these down as notes, and then that will help us when we get into the formal notes a bit later on. So an income statement starts with what? Yeah, or what's the other word? Sales, yeah? Sales. Some people call it revenues, yeah? Some people call it gross receipts, but generally we call it sales, yeah? What comes next? All the accountants there. Yeah, the cost of sales, that's it. You're right into it already, aren't you? You've forgotten you're retired now. So the next thing is minus cost of sales, or some people call it cost of goods sold, yeah? Don't be confused. Cost of goods sold or cost of sales. Now, you don't need to memorize many things during this program, but one of the things I'd like you to memorize is there's a formula for cost of sales. Anybody remember the formula? Well, I'll give you a clue. It's opening stock plus plus purchases minus closing stock. Now that's very important, because when we look at businesses and we start to get more into how they're performing, we'll see how these stock positions can really influence the cost of sales, yeah? So it's sales minus cost of sales, and the formula for that is opening stock plus purchases minus closing stock. I'll explain much more about that later when we're using some mathematics. Now if we take cost of sales away from sales, we then get gross profit, yeah? Gross profit, GP. Very important figure. Why? Because this time I do like the American terminology. The American terminology often calls this gross profit contribution margin, so you should write that down. This is also known as contribution margin. And why I like that term is because it gives us the contribution towards the remaining costs that we'll see. So it's very important. So if I took you down Bay Street and I went into John Bull, what I'm interested in as a financial planner is for every $100 sales in a John Bull store, after we deduct the cost of sales, what gross profit are they generating towards their overhead costs? And it'll be different in different businesses. If you go to the Hilton where I'm staying, yeah, the margin's going to be different, right? If you go to Atlantis Hotel, it's going to be different, but there should be some comparison. This is a figure that you can compare in similar businesses. In a retail store, there's plenty of ladies in here, so if we went into John Bull and we bought some of the jewellery that you're wearing, yeah, let's say we bought it and we paid $100, any idea what they would have paid for? Yeah, well, there's quite a respected formula in retailing, because retailers don't make stuff, right? Yeah. So you know that nice watch you're buying, you're buying, they will never have made that. So we're not talking about manufacturing business. We'll do that later in our program, that's more complex. But most retailers buy things in and they sell them, yeah? Yes, so they buy things in and they sell them. So if they're buying for $50, generally in retailing they'll double that. And it, yeah, well, triple sometimes, yeah. But generally in retailing, generally it'll be a double. So looking for a target price of $100. There he is. So where are you going to put that? Straight in the back. Yeah. So $100 sale minus $50 cost of sale in our example gives us $50 gross profit margin. Yeah. So what margin? What contribution margin is that? 50%. Yeah. How do you work it out? Here's your first formula. We'll be looking at tomorrow evening. Is if you divide the gross profit by the sales, and you'll see this happens all the time when we're looking at profitability ratios. We go back to the sales. So if that's $50 and that's 100, 50 divided by 100 multiplied by 100 is 50%. If someone tells you as an accountant or as a financial planner that they're making 100% gross profit, is that possible or not?
No.
No? It's impossible, like, yeah. It's impossible. Except in Bahamas.
Yeah. 150%.
No, it's not that. You can't get it 50%. Because even using your example, you said if you bought in for 50, you mark up to 150. So do it 150 minus 50 is 100. But 100 divided by 150 is not 100%, see? So there's no such thing as 100% gross profit. Why? Because no business has a zero cost of sale. Except when I first came to Nassau 20 years ago and I got back to the UK, I was doing a program for, was that the Price Waterhouse or in St. Is that ready? Certain? Is it ready? I can take the thing off them. Well, can take it? Alright. You have to help yourself. Okay, so I'll just tell you this and then we'll have the food. Okay? So I was back in the UK in London and I was working with these senior accountants and we're doing a cash flow program and we got onto margins and I said, well, I can tell you there's a business that does achieve 100% gross profit and the business person has got a variable pricing strategy. And they kind of looked at me and said, goodness me, and I said, I've just been to Nassau, and I said, I met this man on the beach, on Paradise Island, on Cabbage Beach, and he's got 100% gross profit margin. And he has a variable pricing strategy. Who is he? He's the man selling the coconuts, yeah? Why? Because he never buys a coconut, does he? Where does he get it from? No, falls off the tree.
Okay.
Yeah. If it doesn't fall off the tree, he shakes the tree. If it still doesn't fall off, he climbs the tree, cuts it down, yeah? Okay, so he's got zero, say. Okay, well, what's his variable pricing strategy? What do you mean? I said, well, if a white man walks down the beach like me from Europe, it's $5. If American walks down, it's $10. If Chinese walks down, it's $15. And if a beautiful Bahamian lady walks down, it's $0. And you get a shot as well. So that was the story. But being accountants, they weren't very amused. And they were senior people, you see, so they couldn't, anyway, I thought it. They said, that's wrong. I said, well, the pricing's a fact. They said, oh, no, we don't mean that. He's definitely got a cost of sale. I said, well, what's the cost? Oh, his machete, his knife. I said, just a minute, I thought you were all senior accountants. Isn't a knife capital expenditure? Which doesn't come out of the income statement, it comes out of the cash flow. I said, no, but there's depreciation on the capital expenditure. I said, oh, okay, that's enough. Yeah. So, there we are. We'll come back to that then. Okay, time to have some food. Right? Come on then, help yourselves. To the back, ladies first, yeah. Ladies first. Then you want any food?
That means you'll be last every day. Guys probably.
Okay, 10 minute break while you get your food, and then we'll keep going a day to try and get through by about 8:15, okay? So we're doing some preliminary work for tomorrow on this bit here. That's a big bank, big bank, Credit Suisse, yeah. Yeah, we did some work with them in London a long time ago.
Okay. Since I've been in school, August, maybe 4 years. Yeah.
Some food?
They don't have anything there for a week.
They have lettuce,
They'll
salad.
have salad.
Okay.
Salad.
Okay, thanks.
Should have some salad. Yeah, they have.
I usually come prepared to destroy it. It's tuna. Chicken, okay.
I didn't think so.
Gotta look alike somewhere, girl. I came straight from the airport, so I left my book, everything. I showed up here last week because they forgot to tell me.
So where we come from?
Right from Miami. So I was like, oh my God, I was on track. I was feel like I'm all in here. And then I had already made arrangements for this. So I said, anyway, I'll be late. And he told me that they recorded, so I said,
Yeah. Yeah, well, it's a double month of July.
right,
Yeah.
yeah,
Suddenly, we're
right.
You live in here?
No, I just went for a trip.
Okay.
Yeah, a few days. Selling some stuff. I can purchase already. The purchase already. Yes, we did. I didn't know. Oh, we crossed over.
Yeah.
Our administration office is right to the left. Whenever you go again, just look in to the left.
Okay.
So we're in different locations now. We're going to move in that building. What is it about?
Cool.
Yeah. You ain't probably gonna manage that money?
Yeah. That's a lot.
That's a lot.
I gave you about 10 in the last 3 days.
You know, right? You're staying over
My
there?
brother is at Atlanta.
Okay.
He comes every year and he stays there.
Okay.
So we're back in fact, when I leave, I will give
You don't cough off some money. I think that's the best business in the mountains. We get money 24/7.
Really?
And we're never.
I'm transitioning. I'm transitioning. I've been a month for.
Wow.
So trying to get back into this.
So, what did you want to do?
Well, I did accounting and then finance. I have an undergrad in accounting. And I ended up into business finance, but I didn't get to use it because I'm a special needs child.
Okay.
And then that turned into like years of study.
Wow.
Now that she's graduating and going on her own. And the other two are pretty, I don't know, they're trying to see.
Yeah.
To use it as a vehicle to see what opens.
Well, good for you. AIG, yeah. They have that's like a multi-corporation and multi-nationalization, because I know I did some work for them. I'm an attorney as well. But AIG in New York, I had to do an opinion for, and like, I don't know enough about AIG, right? I had to know something about it, that's what they said. When the attorney said to me, oh, AIG, if they care to see it, I was like, what is this AIG?
National Group, yeah.
Right, so I started to research, I was like, oh.
This was AIG.
Yeah.
I actually didn't believe it.
Oh, wow.
Yeah, that's my husband.
Oh,
Thanks.
And his kids almost trained.
you've been here?
Abroad for a long time.
Okay.
So yeah, now that's in the resource, I'm trying to find my way back into it.
Yeah.
And I picked up on the person.
Right.
So I think I'll rather do this.
Yeah.
But I just practice that.
That's all right.
You sound like me. I'm like the one who they didn't hear. I just finished my private school. That's what I really get from it. What happened is more in terms of creating project that I think because I do the protection, managing, creating, so that's entrepreneurship and all that stuff. Most they focus on that. So what happened, I started my first
That's what I really
so, yeah. It's like, wait, hold on. I try to tell you a lot of stuff. Get it? What you asking me? But you can't run away from it.
Right. I mean, it's a thing. And I want to do my better care. One of the primary reasons.
Exactly.
And I, even though I have
There's no, yeah, there's this is really different, you know.
so that's how I'm trying to work it. It's not, I totally understand it work.
Yeah, that's gonna work out real good. I'm definitely gonna do this.
So, that's cool.
I started coaching. I got so sorry. Certified coaching. And I still doing it. So I started last November. How to go about it, right? I hear a lot of people say that they're coaches, which I guess everyone's a coach in their own right. But I'm the kind of person where I like to be certified. I like to know that there's structure and there's some foundation to what I'm doing. I know a lot of like what I think about coaching is not necessarily telling you what to do, more so me helping you come into what it is. Yeah. Into something. But my coach, we went back through the difference between counseling I still look at it. For me, a lot of times, I fall into the trap because I'm so used to giving advice. You know, you come to me with a problem as an attorney, this is what you need to do. And it was difficult. Just get it out there. When we do our like role plays and stuff, like, you know, I'm holding back because I'm more of a solution-oriented person. Yes, exactly, and allow them to come into their own. Really? And so, with the coaching that I do now, it's really pretty much, I would say it's really basic because I've done a lot of research, a lot of reading, I put a lot into it.
but I got really talking for about like, 15 minutes, just a brief introduction about what I'm talking about. I can move on some more questions. I do it by telephone. But when these questions start popping up, I can answer them, but I'm the kind of guest that I want to be more confident. You know what I mean? Right.
So this is to try and give you that again, there's noises for the last of the years, and I even homeschooled. Tell me about that. I'm so happy. It does something.
It does. Wow. You love my glass, yeah. I'm highly favored. That's Yes. Once I do Italian conference, there's such against this one of these. I'll do maybe Starbucks. And I'll do the rest. So we by Italian conference. That way you don't have to like meet somebody, get on the line, well, I'm trying to. I'm trying. This is what I want because the thing about it is you know what I mean? Yeah, no, they're not.
So you've remembered it straight away?
Pardon me?
You've remembered it straight away?
I'm trying.
Okay.
Yeah. Some things I remember.
So do you work in Miami?
No, I like to just pick up some things, start a little business.
Okay. Oh, well, that's good. That's good.
Yeah.
That's why I'm loving this. I'm my first class, like, yeah, it's awesome.
Okay, shall we carry on while you're eating? Because most of you have had a long day of work. Just got back after the weekend, so you have a lot of catching up to do. And then we've got tomorrow evening and Thursday evening to go. So basically, when we develop the income statement, as I'm saying, whatever type of business we're looking at, and we'll look at some very different examples during the program to get you comfortable with these. So whether it's a retailer coming through the door, or a hotel operator, or Goldie's Bar, from Marowaki. When I first came to Nassau, I went to Goldie's Bar. I found out straight away why it's called Goldie's Bar. I met him, coolest mate. He had gold everywhere, didn't he? Gold teeth, gold chains, rings everywhere. And I went round the back and saw them doing the conch, Have you ever seen it?
No.
They take the conch out, they squeal, when they come out.
No.
Tap the shell a certain way and rip them out, So there we are. So I bet he gets a good margin then. So what's his cost of sale? The conch. So I don't know where he gets them from, whether he fishes them himself or whatever. So there will be different things here. So that formula is one I'd like you to try and memorize. Opening stock plus purchases less closing stock, because as we go forward and look at different businesses, you'll see, this has a big influence, so, on what stock they're holding, and in terms of the cash flows, the stock will transmit into cash flow, because when they sell stock, it'll generate cash flow, but while a business person is financing the stock level, that actually uses cash flow because it requires financing. And that will be one of the key things that we look at in terms of financial planning. How much stock are they holding? What's the stock planning system, etc. Okay, now what comes next after the gross profit margin will be other costs. And there's different names for these again. But generally I like to call them overhead costs. Yeah? Now some people call these SG&As, that's American terminology, selling, general and administration expenses. So you'll see SG&A in some accountancy textbooks. Sometimes you'll see the term overhead costs. Sometimes you'll see indirect costs. And you're thinking, well, why are they called indirect costs? Because sometimes people call the cost of sales direct costs because they tend to vary with the output. So if you imagine our retailer store in Bay Street, the more we sell of the jewellery, etc., the more we're buying in. So you can think of the cost of sales as a sort of direct cost relating to the sales, yes? But the other costs in the shop, these costs here, these are less direct, and there'll be things like the rent for the shop, the utilities, yeah, the wages for the people working there in the store, they would come all in this section here. So there are examples there of overhead costs. Now, after these overhead costs have been deducted, the next line that we come to is OP, which stands for operating profit. Now this is a very, very, very important figure. Why? Well, it's important just like the gross profit was important, because the gross profit gave us the contribution towards the overhead costs, yeah? So if we had in our example $100 of sales generating $50 gross profit margin towards the overhead costs, the next point that you need to look at is the operating profit, because this is known as PBIT, profit before interest and tax. And this is where the American term comes in, the very famous American term, which I'm sure you'll have heard, EBIT. EBIT, earnings, these pens, sorry about that. EBIT, earnings before interest and tax. And when we go into cash flow, we'll be looking at the terminology, the American terminology, EBITDA. Now you might have heard people say that, you heard it on Bloomberg, so CNN News, XYZ Corporation last year made $300 million so-and-so, and they had an EBITDA of so-and-so. I mean, what the hell are they talking about? How is the person watching TV, the ordinary person, and the ordinary American, are they going to understand what EBITDA is? Of course they're not. If you meet an American banker, that's all they talk about. EBITDA, why can't they speak normal English like we do? So anyway, we'll come back to EBITDA, but you can see EBITDA is EBIT, which is operating profit, and then you add back depreciation and amortization. Why? Because as you'll see, you never write a check out for depreciation or amortization. They are charges against the income statement. So in terms of cash flow, we can add them back, but we'll come to that later. Don't worry about the cash flow for the moment. We'll be doing the cash flow on Thursday evening. So EBIT, earnings before interest and tax. Now this is very important. Why? Because the next bit often is the killer for lots of businesses. Why? Because it's interest. Yeah? So the next thing to deduct is the interest charge. So it's all very well, bankers historically talking about, we want 2-3 times interest cover, so now you know what they're looking for. What they're looking for is the relationship between the profit before interest and tax and the interest payment. So traditionally, bankers would look for 2 to 3 times cover. Why? Well, that was the sort of benchmark that they developed. And as we see during our program, some of these old benchmarks are still quite useful, but some of them in the modern world are positively dangerous, particularly when we look at the cash flow section. So if we deduct interest, what have we got left? But if we had PBIT, we deduct I, there's no prizes for guessing, we now got PBT, yeah? Profit before tax, except in jurisdictions where you pay no tax, like Nassau. Or you're going to start paying tax, aren't you? Yeah, so the next thing we deduct is tax, and we get the profit after tax. Now quite often, as you'll see in small businesses, quite often the profit after tax will be the net profit. But in larger companies there could be a dividend payment, and that will come next, before you get the net profit. But don't worry too much about that at the moment, because there's certain minor adjustments when we look at the larger businesses. But what we're looking for is the net profit. So, or loss, yeah. Now, that's an interesting point. Or loss. Who said or loss? You did, yeah. Okay, so if you've got a loss there, and the business person comes to see you as financial planner, what are you going to be looking at? Well, if they're making a loss, the answers have got to be on here. So that's why this template is very useful. This template is the driver of whether you make a profit or a loss. Okay. Now, if we make a loss, it could be, oh, they're paying too much tax. Maybe. If they're making a loss, it could be they're paying too much interest. Or it could be their overhead costs were too high, the indirect cost. Or it could be the cost of sales is so high that they're just making a very, very small gross profit margin. Or it could be all of those things are still okay, but sales have gone down. Why have sales gone down? Could be because of competition, or it could be the economy. Yeah. Now, if sales have gone down by, say, 10%, you need to find out as financial planners, is it because of mismanagement, or a change in the products, or is it the economy? If the economy's gone down by 20%, and the business person you're working with as a planner has gone down by 10, well, actually they're doing pretty good because they're outperforming the economy collapse. Yeah, see what I'm getting at? Yeah. So we have to think beyond the figures, but we have to start with the figures, because if we don't have the figures, we can't like flex them around. So financial planning based on this will all revolve around these things on here, yeah? The combination of the sales, the combination of the gross profit, and the combination of the overhead costs will drive the operating profit position. Everybody okay so far? So I know I've gone quite quick on that, but you can put any type of business. The internet's brilliant now because you can download your favourite company, yeah? Just think of a nice company you like, a big one. You could try Walmart if you wanted. Yeah, but that's a quantum leap, because if you look at Walmart,
Very complex.
yeah, it's complex, and you're looking at world number one, yeah, in the retailing style, yeah. So take a look at something a little bit smaller, but the advantage is just head for the media relations section, and you should find their annual report and accounts. Yeah, take a breath, cross out a few zeros, and then just try and do this, and you should be able to do it. You should be able to make sense of the income statement, yeah? If you can't, email me. Don't email Miguel, because he might not respond. Or he might, sometime. So that's the income statement. Okay, balance sheet next. Balance sheet, where can I put that? Yeah, I'll try and squeeze it in here. Okay, last thing for tonight, right? Now the balance sheet, we're going to do it in a slightly different way, because we're going to do it how it used to be done, which is very old-fashioned. You say, why is he showing us this old-fashioned things? Well, the reason I'm doing it is because it's easy to understand, and then when you get the modern balance sheet, where the accountants changed it into a vertical presentation, why they had to change the old one, I do not know, but that's life, isn't it? Life has to become more complicated instead of remaining easy as it was. So the balance sheet balanced. So that was a good start. Yeah, so when you looked at the bottom right of the balance sheet and you looked at the bottom left, was the same figure, it balanced, yeah? Now it doesn't, it's all over the place. The reason I'm showing you this template is, again, you can take any company and put it in to these boxes, yeah? And if you don't understand it, put it in the boxes until you do. There's nothing wrong with having templates, is there? So the balance sheet, we'll do it left and right. Here we go. With this final assets out. I'm going to put liabilities on the left and assets on the right. Because if it's a French balance sheet, it's the other way around. Why do the French do everything different to the English? Same with driving, don't they? They drive on the other side of the road. It's all through history, you know. You know, we fought each other for over 1,000 years. So that's what the problem is. So we'll do it this way. Start with assets, that's the easiest to think about. So, to the accountants in the room, what assets do we put here first? The current assets. Yeah, the current assets, which are things like, yeah, cash if there is any. So current assets, we'd have cash. I wish to buy some pens. So cash. Try this one again. Yeah, debtors or accounts receivables. Yeah, debtors or receivables. You'll have to remember both words. Why? Because American accounting is receivables, international accounting is debtors. Yeah? So it's the people who owe money to the business. When you think about the bank, those of you who work in a bank, and you look at the bank's balance sheet, who are the debtors in the bank's balance sheet? No. No. You're on the wrong side, yeah. It's the loan portfolio. They're the people who owe the money to the bank. So the bank's debtors or receivables is the loan portfolio. And that's why we have such a big problem in the Caribbean, because in lots of Caribbean commercial banks, if you look at the loan portfolio relative to the total assets, if you look at the receivables to total assets, you can find it's as high as 70, sometimes as high as 75%. So if out of every $100 total assets in the bank, you've got $75 tied up in receivables, goodness me. That's why you've got to manage your loan portfolio properly, because any slippage, you know, you can make money or you can lose a lot of money. Yes, it's a huge figure. Again, if you don't believe me, look in the bank, look at Credit Suisse, look at your receivables relative to your total assets. You'd be surprised. Globally, it averages about 60 to 65%, but it's still a huge figure. And the other one is stock or inventory. Yeah, again, the two terms. Yeah, they're the three main ones. The current assets. Yeah, and then we've got fixed assets, which are things like property. Property, plant and machinery, fixtures, fittings, equipment, motor vehicles. Don't forget those, always like the toys, don't they? MVs, and the BMW with all the skirting around and the big speakers going and all that sort of stuff. They've got to be in the balance sheet, don't they? Particularly if you're in Miami, goodness me. So all of those will give us the fixed asset total. And if you do it this way, you know, you can then see the proportion of the business that you're looking at as a financial planner, how much is in current assets, yeah, and how much is in fixed assets. Then simply add the two together and you get your total for total assets, yeah, at the bottom there. And that's how you need to approach it. It doesn't matter if this is Walmart, or if this Atlantis Group, or if this is John Bowes, the jewelry, or whatever, yeah? It's the same principles. Everybody came that. Then we cross to the other side. We have current liabilities, which are the short-term liabilities, such as bank overdraft, if there is one. So we've got bank, so short-term liabilities. Creditors, or, yeah, the American term, payables, yeah, accounts payable. and there might be some short-term tax. So then we'd have a total for current liabilities. Then we have long-term liabilities, which are things like loans and any long-term tax. And then we're going to have a line which gives us all the liabilities, yeah? All the liabilities here. And then the final bit is just simply to take away all the liabilities from the total you've got down here, and that will give you the balancing figure, just the same as we did with the personal balance sheet. And this section here will be the business net worth. You know, whether it's Walmart or John Bull or whatever. In Walmart, it will just have more items that will make it up. So if you're looking at a complex balance sheet and you say, oh, you know, is the equity, is that the net worth, or is it shareholders' funds? What am I actually looking at to understand it? Here he's back.
Yeah.
To understand it, I left you a few jokes on your camera.
Only jokes.
Yeah. So if we don't understand it, just do this. Use your template. List the current assets. List the fixed. List the total assets. List the current liabilities, long-term liabilities. Take those away from the total, and you'll get the net worth position. So that's perfect timing. We're finished for tonight. We got further than we expected, so we started on the preamble for tomorrow night. Okay, questions for Miguel? None at the moment? Keep it up later.
Okay,
Yeah, these things are terrible.
I know I haven't given you a schedule as of yet.
Look at those.
Okay, tomorrow we should have this finalized, okay? The classes are usually held on Thursdays, 6 to 9. The only exception is the Saturdays when Mr. Checkley is doing class.
I'll be online from London.
Okay, so it's only 3 Saturdays. Actually 4 Saturdays in his review class, the last one. We scheduled to go until the end of November with the exam around the 1st of December. Okay? The exam is 150 questions.
150.
Yeah,
Sounds like it's 50.
150 questions, 3 hours, open book.
Great.
Open book,
Okay. Passing rate is about
150 questions. What's its timeline?
3 hours.
Yeah, that's okay. She's 50 an hour. Yeah.
In a couple of classes, I'll give you all a link so you can practice online to see how the exam looks like. Some questions and so forth. I have more material to give you all.
What's the passing grade?
It's 65? Yeah, 65%. So, out of 100, you have to get at least 99 correct. Okay? Yeah, the 99 was like around 66%.
On the one.
Or 150, sorry, not 100.
Okay.
Oh, the 150.
Oh my God.
Alright?
Your financial planning.
Some of them are paragraph, all multiple choice. Some will be based on some case studies where you have to read a paragraph and then answer questions on that. Some calculations as well. Allowed to carry calculations. Only a cell phone and an extra laptop you won't be able to carry. And no tablets. So stick to regular calculators. Okay? But that's not until November. Yeah, end of November, 1st of December. Okay? We have a schedule on here for November 28th. But I say, yeah, but I say, I don't know it's a Friday.
Is it Black Friday? That's when everyone go to Miami to shop.
November 28th?
And push it
Black
up.
Friday, man, you need to put December 5th.
Push it up.
Okay, then we'll go sort it out. But hopefully I'll give you all a schedule by tomorrow. Okay, class tomorrow. Y'all, there's another class joining y'all tomorrow. So then they're going to do their revision corporate
Corporate
finance.
finance, so they're looking at balance sheets and income statements and cash
Anything.
flows.
Okay? Yeah, she's in our corporate finance class.
All right.
Yeah. She is. Sorry.
Yeah, I am.
All right? Class will be this classroom right below us. So now 2 flights of steps, okay? Take one and come right around.
Do you do the exam?
No, she
No, I
doesn't.
didn't do it. I guess.
Okay, that's me. So I said I hope to give you all.
Everybody okay? Everybody's looking tired now. So we'll meet again tomorrow night when you're all bright and breezy and we'll do some mathematics, yeah?
Yeah, I have one more
Bring these
question
two.
to ask.
Yes, sure.
What's the success rate for CFP?
Yeah, it's about between 60 and 70 first time pass. The second time, most of the people who don't do well spend most of their time in the book, looking up, trying to find an answer to every question.
Yeah. That's
Okay?
what I told them. I said,
Good.
just do it from your knowledge first, then have a second run where you look things up. Don't look everything up.
You know what I mean? 'Cause
They run out of time.
Yes,
It's like
we run out of time.
Because 3 hours might sound like a lot of time, but it's,
That flies by,
yeah.
flies. And if you do your computer based, you get your results right then when you finish.
Was there was mock, right?
Oh yeah, no.
We'll give you a mock.
Yeah, wait a minute. Yeah. On the mock exams, you get streamed.
Yeah, you get the mock exam. The mock exam is only 75 questions, it's half. 25 in 3 chunks.
Just one mock?
3 mocks.
You
You
do
get
3 mocks, yeah. So
oh,
definitely do the
25
mocks.
chunks. It just gives you an idea.
Gives you practice on the machine, how the questions are said, stuff like that.
The time?
Yeah, their time as well.
So basically.
Okay. You all do that. Yeah, nobody sits a third time.
Oh, it's 3 max? Is that why you're saying about it?
3 strikes and you're out.
I'm
Sorry, you stress me out. Just keep your folder organized, know where your stuff is at. But the questions aren't based really on memorization, you
No, that's what I
understand?
told them.
But you know.
So,
Basically,
yeah,
you know
it
what
ain't like
you've
you
done.
go in your book and
Fine.
Okay. fill in the blank,
Yeah.
okay? Right,
Okay, wait, be on that.
up and down. Class, take care of risk class, up and down. Okay,
Thank you.
so see you tomorrow, just remember we're in this classroom right below us, just come up 1 flight of steps and right around,
Okay.
Well, they said.
okay?
And everyone will be there, we got the schedule.